Good morning, ladies and gentlemen. Well, as I thought, I don't have the luck that these negotiations between China and the US are over in Geneva at this time when I'm doing this video, so I have to cover really both sides. Nothing is going to be learned from the model score, so we can safely ignore it. But let's have a look, first of all, at what the Trump's policies are, and then try to work out what a deal might do to the market and what no deal might do. But I think it's important, before we start taking into account Trump's tweets, to actually wait and see what the Chinese say that the situation is. And I think that by the end of today, we will have that statement from the Chinese and we will know which way to jump. So these are Trump's agenda and policies. Now, as it can be seen from the UK deal last week, tariffs are primarily a revenue-raising tool. He keeps on talking about tariffs being used to open up exports of US goods, but I don't think that that is really in his agenda as much as raising revenue via tariffs. If you impose a 10% baseline on your sort of strongest historical ally, then it becomes pretty clear that what you want to do is raise revenue. And that is anti-growth. Immigration curbs, of course, are anti-growth, and deficit reduction, and this is something that Besant has been very clear about, is that he wants to reduce the debt to GDP every single year. That is anti-growth. If you are destimulating the economy by lowering government expenditure, by definition that lowers GDP. Now, the pro-growth parts are deregulation, which is obvious, especially in the banking sector, allowing them to buy more bonds, and lower oil prices through increased production to lower and basically offset the inflation that the tariffs generate. So those are his bedrock policies. And I just can't see how it really matters whether the Chinese tariff is 140%, 80% or 50%. Now, if it was, 20, 30%, I think it would be definitely positive for the market. But anything sort of 50% and above, I think is still an anti-growth policy. And an anti-growth policy at 5,700 in the S&Ps, to me, makes no sense. Because if you have an anti-growth policy, that means that earnings really can't be anywhere near the 270 that the market is, baking in for 2026. And then the multiple even needs to be lower than the current 21. So if you're looking for lower multiples and you're looking for lower overall earnings, 5,700 makes no sense. So this is the background that we're in. But let's now have a look at what the yield curve is going to do, because that, of course, is going to influence very strongly the trading of the next few days. I just wanted you to have this background in mind, because at some level you have to start looking at being long of bonds and short of equities, because the overall effect of his policies is anti-growth. There can be very little doubt that the first market response to any kind of China deal, whether it's good or bad, just the enthusiasm, is going to be a strong flattener. Why a flattener? Because the Fed will be vindicated in its wait-and-see approach. It will probably be on hold for a very long time. And also the odds of a recession have to be reduced by a certain amount. The first response has to be a strong flattener. On the long end, which is much more susceptible to inflation expectations, those have to be reduced as well. So you get a double whammy. You get positive news for long-term bonds, and you get negative news for the very short end, which is way through the funding rate. So I would expect 2s 10s to trade minus 42 almost immediately, and really go and test in this area around the minus 28. So by the end of the week, you would have thought they'd be trading around here, just being hit by the 200-day moving average. 5s 30s, much the same kind of story. I would have expected them to go all the way up to minus 67 and possibly even fill this gap at 62. That's the kind of behavior that you have to expect, the kind of animal spirits you have to expect from something like a 40-50% tariff on Chinese goods, and the Chinese not being very upset about it. I just can't see an alternative. The SOFR curve also should really start flattening out, because the Fed is really not going to have any urgency. The recession should be postponed. The expectations that the window of opportunity for unemployment to start going up in the next month or so should also close. So if there is no acceleration in unemployment and the inflation expectations are anchored, there is really no reason for the Fed to do anything at all. So if we look at the 2-year, you would have thought that the first move is a spike all the way up to 405, and then quite a bit of trading there looking for the data. 5s, you're looking for these kinds of levels, 413 first move, and then probably even to 427. And much less in the 10s and 30s. I would have thought they don't go above 450. And the 30s, I would have thought they'd remain quite stable, giving you a very strong flattener in the first few days. Now, of course, I have to cover the other eventuality, and I would really not do anything at all until we hear the Chinese side of the story. Because if the Chinese say that really the talks haven't produced anything concrete, you are not looking for this flattener. What Trump tweets is going to be immaterial if it's negated by the Chinese. So definitely wait for that, because even if Trump tweets, yes, victory, everything's, gone my way, and you get the flattening move, if the Chinese then come out and say no, then you're going to have a very big counter trend move. That is actually what is most likely to happen, that, Trump declares victory and in fact has achieved nothing. I think that if the Chinese basically walk away and a deal might happen in, I don't know, a year or something, then how are we going to avoid the recession in the short term? In the short term, you have to then start looking to buy the 2s and 5s. And I think that that is the highest probability. But I'm just trying to cover all the bases and tell you why a confirmed deal is a flattener. And of course, the opposite is true if there is no confirmed deal, or a one-sided declaration of victory, because then you really should be starting to get an acceleration of the steepener. I just can't see how we're going to get any kind of respite to the reaction that you're going to get from firms once they realize that no, the tariffs on China is still prohibitive, and you don't have the goods, you don't ship them, you don't transport them, you don't sell them. You really would have to expect that earnings are going to be significantly hit in certain parts of the economy, and you have to start thinking that those parts are going to start laying off workers very, very quickly. In the EU, the move to flatten should be nowhere near as strong. Now, while the Shats can go back to the 191 to 205 area, it should really not go anywhere beyond that. While the 10s actually should start really getting hit, because why would you want to own real yields at 0.5%? That really doesn't make any sense when you can get 210 in the US. So you should actually start getting the bonds going back up and actually fulfilling what I was talking about on the monthlies when they start going up. And especially if you get the end of the war in Russia, Ukraine, that should be an increase in defense spending that they've been talking about. It gives them time to do it. So that's going to moderate what the bunds are doing. But I really don't think that the bunds down here are any kind of bargain. And if there's no reason to expect a deflationary effect from the US tariffs, because there is a deal, that is not good for bunds. The fact that you're going to get probably less inflation because of at the end of the Russia-Ukraine war is a moderating factor. But I really think that bunds down here are not a buy in any sense. So if I look at 2s, 10s, I don't think that they go any further than 58, and then they start coming back down and really going back down to these kind of levels eventually. I just don't see that bunds make any sense given the background and the fact that if there is some kind of a deal and Europe can make a deal with the Chinese as well, then why would you expect anything but a steep curve in Europe? I think the dollar has stopped going down, and I think it's retracing, and I think that 101.90 is going to be the absolute important swing level. I think that we don't go any higher than that, and let's have a look at what that implies for Euro USD, and I think it's the equivalent of this 110.60 area. I think through there, and we are in a different world for some different reasons. I still think that it's going to make new highs eventually because the Trump policies are what the Trump policies are. But in the meantime, I think if there is a deal with China, I think the dollar is going to be stronger, and I think that the repatriation flows are going to slow down, which gives us the level I've just given you in DXY, and really a trading range from 110.60 up to 112, 113 is what you can expect for the next few weeks. I doubt the deal with China will be permanent, and it's a dichotomy. You have the good cop, bad cop. You have Bessent saying yes, we're going to have a deal. You have Trump saying, yes, we've achieved victory, and then you get the Chinese possibly saying that, no, we haven't got anything. We are a long, long way away from anything. So you're going to get a trading range, but to me, it's unlikely that the dollar can weaken substantially in this kind of environment, simply because the interest rate differential is too great. So I'm much rather see, and we can see that in DXY better, this kind of behavior for a few weeks just like here, and then correct all these, oversold levels on the weeklies. But 101.92 is really the highest that I can see it for the time being. Commodities continue to trade sideways. And really, what one can expect if there is a deal is that they are supported, or they continue to be supported. There should be no reason for them to start trading through 2071 again. Will they try the 2293 level in GSG? I don't know, but certainly that should be the direction, because commodities have been trying to anticipate a big slowdown in the world economy. The first reaction, if there is a deal and the Chinese confirm it, should be that they start going higher. But again, I'm certainly very agnostic here. And gold, what to say about gold? I mean, we now have some very good levels to trade against, which is 34.30, which is the highest close, and the fact that we close below that area that I thought was very good resistance, despite the spike, the one-day spike. If there is a deal, it would make sense for gold to try and break the 3200 level and come all the way down to these 3130 levels. Gold GSG should really suffer. That should be the move, right? Gold, no reason to buy it. GSG should be stronger, and you should see a gold GSG move that comes down here and fills these gaps and basically tries to find support with the rising 200-day moving average. That's why I prefer GSG to gold, but I haven't been making any money out of it. The Bitcoin move is actually going to be even more interesting. And here we have Bitcoin. The move really should be to not buy Bitcoin and not buy gold, but buy risk assets. You would have thought that people who have been reticent to buy equities and instead last week bought Bitcoin and they bought gold or whatever else they bought would actually reverse that trade in the short term if there is a deal. If there isn't a deal, I think Bitcoin continues making new highs simply because it's faute de mieux. A lot of people are buying Bitcoin because they don't know what else to buy in this dichotomy that's going on with Trump and his policies, which are on one moment, off the next. And they have been buying equities, or traditionally they've been buying equities, and now, just like me, are very, very unsure that equities are a good investment, simply because all his policies, or the overwhelming amount of his policies, are anti-growth, and the market is very, very expensively priced. So what else do you do? Well, I guess you get a candle like this where people just say, I don't know about equities, but I'm going to put some money into Bitcoin and leave it there. It should make sense that Bitcoin actually goes up if there is no deal, because the Chinese should buy it to try to get capital out of the country, and the US investors should actually buy equities as opposed to Bitcoin. That would make sense to me. But in any case, the technicals are very clear. I think you start getting two successive closes above 106,235, which is the previous high close, and then you have this level at 108,200 or 300 as the previous all-time high. It certainly spikes it, and then you should get quite a quick move, especially if we start looking at something like the weeklies. You should start getting quite a quick move to about 116 over the course of 2 weeks. with the proviso that, to me, equities are hugely, hugely expensive, because I believe that the Trump agenda is anti-growth. I know full well what's going to happen if they announce a deal and the Chinese don't contradict it. You're going to get a spike which takes out this 57.62 level, and there's got to be a whole load of stops here, which could take it all the way to 58.64. So, it is what it is. That is going to be the market response on, if it opens, higher, it's going to go straight to 57.62. And these stops here are all going to get triggered, and we go to 58.64. There's very little to be said about that. Now, on the downside, you can see how important 55.68 is. I have to cover the downside because I don't know what the outcome is. 55.68 breaks, you have absolutely nothing until 54.46. And then I think that we fill this gap down here without any problems at all. I keep on saying it. It's anti-growth. It's an agenda which is anti-growth, so eventually the market has to come down. Just do the maths. We are looking for 270 plus 2026 forward earnings. How is that going to happen with this agenda? It's just impossible. That's like a 9% increase in earnings from 2025. And they're not even going to be that good in 2025 potentially. And then if you apply a normal multiplier of between 18 and 20, because we are certainly not going to get a roaring economy over the course of the next year, I mean, you get 47,000 to 5,200. You get that kind of area. To me, this is hugely expensive, but I know what they're going to do. They're going to take out all these stops here between 57.62 and whatever that high was, 57.86. That's what they're going to want to do. I consider this 20,392 level extremely important in NDX. If it breaks through there, it's going to go straight here to 20,850. So 20,600, you're looking for this kind of level and all kinds of stops going off. It is what it is. Again, on the downside, no deal, it's quite clear this is your first support, 19,145 on the NDX. That is going to be your first support. And you don't really have to think after that, any kind of bounce, it probably goes and fills this gap all the way down to 18,500. I think it's really, as simple as that in both cases. The fact that VIX closed right on its lows shows you how unconcerned the market is. And maybe it's right to be unconcerned, and maybe there will be a deal, or they will announce some kind of a deal. But I think longer term, any kind of put buying at this level of volatility, 18, just below the 200-day moving average, to me makes plenty of sense. I am still looking for this gap to be filled. And once it is, I think that would coincide with, if there is a deal, with the spikes that I've been talking about. And those spikes will happen, for sure, because look at the VIX. It's telling you that the market is completely unconcerned and wants to take prices higher. I disagree longer term, but short term, I know not to get into its way and only do some small option trades, like the ones that I know that I have on, and only really start arguing with it aggressively once these levels here have been achieved. If you have a look at the DAX, you can see how close we are to the all-time high, 23,726. On a deal and the enthusiasm, it's bound to spike it and go probably all the way to the top of the daily Bollingers around 24.2 or 24.3. And here on the weeklies you're going to have the same kind of Bollinger because it'll go up because of the new week. So everything is pointing to, if there's a deal, they take it a good 3, 4, 5% higher because it is just what it is. Nikkei is interesting because it's respecting technical levels very well indeed. If you start opening above 37.9, you are going to go all the way to these levels around the 38,900, 39,000 level. That seems to be a given to me. So everything is really, sort of coming together, that if they announce some kind of a deal and the Chinese confirm something, you're going to get that quick move up to 39,000 in the Nikkei. So this video has been really hard to do because the outcomes are almost, binary. My message is that I have no doubt as to what Trump's policies will eventually do to the economy, which is weaken it, or they will be anti-growth in their totality. The problem is the timing of it and the fact that he keeps on tweeting stuff which just plain isn't true. I have an anti-risk bias, but I know full well what the market is going to do if a deal is announced. It's very easy to say that what's going to happen rather if there is no deal, or the Chinese actually say there is no deal. The market is just going to start falling apart because the anti-growth policies are there in the background all the time. I know that they're going to spike this market, and therefore this is the kind of level from 57.65 up to 58.64. That is what I'm looking for, and that's really, the 100 points is only 2%. So that is the kind of move that I'll be looking for if they announce the deal. And that is why it's so difficult to marry the technicals with the fundamentals at this stage. It's a question of trading what's in front of us and being patient and waiting for the fat pitch, which will come probably once we spike these levels and everyone's long. At the moment, I don't think people are long. The only people who are long, I think, are the CTAs, the leverage community, and they are just basically following the charts. The charts are bullish, and therefore they expect a continuation of that bullishness. A deal would certainly prove them right, and it would go to these levels. But once these things are exhausted, the fundamentals of Trump's policies are negative for growth and favor bonds over equities. It's not going to happen next week if there's a deal, but what will happen, you're going to have the flattener if there's a deal, and if there's no deal, you should start expecting a real acceleration of the steepener, because we're getting into a window when absolutely firms have to decide what they're going to do for the next couple of quarters. Either they lay people off or they don't, and they put into practice their expansion plans. They just can't keep on being in neutral forever. They have to start making a decision, and the decision will actually drive what happens to the economy. I still think that even if they decide to go and start accelerating their investment plans, that they're going to be very, very cautious, and that the overall macro wind is going to be against equities. But as always, I will let the charts dictate the speed and when we put a trade on. I just think it's very, very easy to know what the market is going to do on a deal, and also very easy to know what it's going to do on no deal. So we will wait for the announcement, we'll wait for the Chinese, and then I'll tweet you what my strategy is. Thank you very much indeed, and tweet you soon.